Back on Big Winter Boulevard, huh? Back on Big Winter Boulevard. Let's see what this thing did. Oh, it's actually up. Interesting. I think we streamed Fslr last time, and it wasn't that good of a stream, but I guess we'll do it again. There's not really many companies that I know of reporting today. Yeah, I mean, I know O. O probably could have been a good one. I think that's potentially up. Yeah, maybe we should have did O. Never mind. Not that great. Alcon. I think I looked up a lot of these, and Fslr was the only one that was actually up a lot. Workday was up a lot, but it sold off the past few months. Yeah. I think Fslr is the only one that's really notable. And it could be an interesting earnings call. I guess Lucid could be okay, but Lucid's trash. Seen Burry in the Substack chat said he will sell if Ryan Cohen buys BBY. Also said PayPal very unlikely. I wouldn't sell if they bought BBY. But that's too small anyway, so that's not happening. PayPal doesn't make any sense, though. Yeah, Fslr is the only the only stock reporting today that I feel like would have a following. We'll see though. I swear I did this last time and like nobody came through. I wanted to look something up on the SEC report, but I forgot what it was. Guess it wasn't that important. I think you recommended 4 is a better option. I don't know, I have to go back and check, but that's what I remember. What the hell's 4? Shift 4 payments? It's gonna be retail. I don't know why people suggest things that aren't retail. It's not gonna be a financial thing. Burry's an idiot. Burry's bearish on the market when the market is clearly bullish. Fucking moron, bro. It was looking a little bearish yesterday. It was looking potentially bearish, but I don't know anymore. I guess today's not that big of an up day. I mean, let me get to news. How much is the market up today? Only 400 points. Okay, that's not that big. Still neutral, I guess. You're on the verge of bearish or bullish. Crypto had a little bounce too. Let's see. Home prices. Not really elevating. Actually, very low. Interesting. Bro, it's gonna have its moment though. Real estate's on the comeback. It's just going to take a little bit. Real estate slow. I mean, look at the price index. That's at all-time highs. That shit might skyrocket sometime. Potentially. We'll see. We'll see. Let's see. Some Fed speeches. Money supply. That's at all-time highs. Weird economics. The State of the Union speeches tonight. I don't think that I don't know how important that is or not. No insider buys, really. Pacer Advisors bought 180,000 shares, 20% increase in their share position, but the 13Fs are slowing down. Nothing there. Crypto, I mean, Bitcoin bounced. All the altcoins are still in the shitter, it seems like. Kind of wild. There's been a lot of people in the sauna lately talking about crypto and how much they're down and that crypto's a scam. And I think it's pretty funny because now is potentially the best time to buy crypto. I'm not buying it, but it's pretty funny seeing people's perceptions because go back, I don't know, what, like literally 2 months ago, I think. 4 months ago, about. Everyone and their mom was bullish on crypto. It's kind of interesting how quick that changed. Yo, what is up with the stream today? There's nobody here. Rip. Hopefully they didn't shadow ban my account for talking shit to the Germans. Anthropic announces new partnership. I assume it's with Salesforce, judging by the picture. Meta strikes AI chip deal with AMD. The Germans were so pompous. Bro, that was an annoying stream. Like, actually annoying. I've never seen so many dumb people in one place. Like, legitimately. Russia. I don't know, man. Russia's a goat. Russia's a goat. Those Germans were fucking nuts. You had like 5 convinced you lost money. It's because they come in through the short. I link the stream to the short, and anyone who watches the short, goes to the stream and they think I actually, like, I don't know. They just don't know. They just don't know what it's like to be a true big winner, you know? They don't know what it's like to be, although that stock's up quite a bit now. They don't know what it's like to be a real investor. They just made some money one time investing in that shitty boner pill stock. They just think they're like genius. Like most people who make money in the market. They make money once and they think they're really smart for some reason. I actually had another profitable year. I didn't trade on my account last year, but I did some trading, and I built the rest of the GameStop position on my mom's account last year. And last year was a profitable year for me. Again, So I know what I'm talking about when it comes to this stock shit. My track record proves it. But everyone else just thinks they're smarter than they actually are. Although I don't know how much I made on the IRA, because I didn't get a tax form for the IRA. So I probably made more than I technically, I mean, I didn't make that much on the one account. It was only like 3 or 4, I think it was like $3,300 or something. But I think on the IRA I made like a couple grand as well. So I don't know exactly how much I made last year, but still another profitable year, and with unrealized gains. Fuck. With unrealized gains, we're up huge. So, I don't know. I don't know. Just kind of funny. Kind of funny. Robert Carradine dies, 71. Rip Robert. I don't think there's really any news today. What's up with Burry's tweet? I have no clue. I don't care what Burry says. So I don't know what you're talking about. Burry's opinion's irrelevant to me. I maybe saw the tweet, but I don't think I read it. Because I don't value Burry's opinion. I really don't. It's irrelevant. Ryan Cohn buys BBY, he's out. Wow, well, good for Burry. Muma already mentioned that, but I have no clue. I don't find Burry's opinion relevant at all. Anyway, and it's gonna be really, 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 really big, and Bed Bath and Beyond is not really, 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 really big. So I don't even know why he would be even talking about that, because that's not even on the radar. But yeah, I haven't seen that tweet. Maybe we'll check it out here in a minute. There's nothing in the news front. Holy shit. Jeez. Chinese streamer banned after posting video of wife's 23-hour childbirth to advertise diapers. What? Someone else did that. How come this guy got banned? Someone else literally did that. That's crazy. Fortnite adding viral brain rot skins. What the fuck? Discord delays global age verification rollout. Yeah. Twitch announces major change to bans with 2 new suspension types. I don't want to read about that. I'm not in the mood to read news right now. What the fuck, dude? The news is so dumb. Liquid Death reveals urn with a speaker so the dead can listen to Spotify's eternal playlist. Like, what? Wouldn't it die? Wouldn't the speaker die? Doesn't make any sense. McDonald's brings its Big Arch burger to the US. The Big Arch? I hate McDonald's, but that looks pretty good. Maybe that's how they get you, bro. They make it look all fucking fire on the photo, and then you go and eat it, and it looks like shit. That's how they get you right there. Liquid Death is dumb. I think it's originally a pretty interesting idea. Try to cut waste on water bottles by doing water in a can. But yeah, I don't even think I've ever drank a Liquid Death. AMC pulled that AI movie, which is pretty funny. Football match halted as seagull hit by ball lands on pitch. That's crazy, bro. Seagull's Utah's like state bird. Gas station suing worker after he claimed 13 million lottery win on abandoned ticket. What a boss. What a boss. I'll be like, go ahead and sue. Go ahead and sue. I'm rich. Travelers trapped overnight on plane after airport closes with them on the runway. Alright. What's up, Grady? Liquid Death sodas are actually pretty good. They have Dr. Pepper Imposters. I didn't know they had soda. What's up, Moose? Welcome to the slowest stream ever today. Hope you're doing good. Just finished lunch. Ooh. I should have ate lunch before I came on. That sounds good. New Roblox parent advocate denies everything, blames parents. What? Let's see. Company attempted to respond to criticism with the appointment of Dr. Elizabeth Malovodov, who previously worked on child safety at Lego Fortnite. Seemed like good news. However, a recent interview with The Vulture went extraordinarily bad, with the new appointee showing no awareness of the issues affecting Roblox, at one point implying the very real cases of abuse were not true, and then just openly confessing she had no idea of what to do. What the fuck, dude? Corporate America is, like, actually so dumb. She probably got hired, like, multiple six figures a year, and she's like, I don't know how to do my job, Dad. I don't know how to do my job. They don't have the interview? I don't want to read about that. I'm just not in the mood to read news, bro. I've been in a bad mood this week. I don't know why, bro. I don't know what's going on. PS5 still outselling the Switch 2. Suspicious poly market bets fuel conspiracies around Logan Paul's card. Let's see. Why did someone pay quite so much for Paul? Alright. Attention then turns to Polymarket. Ahead of the final day, Polymarket was predicting a 72% chance the card would sell for over 7 million. Meaning, had it sold for 6.82 million, it was sitting at before the extended bid. A lot of people would have been disappointed. However, Polymarket's odds flipped much more in its bettor's favor. The moment that price went over 10 million, at 8 million it sat at 61%, but at 10 million that dropped to 40%, and as for 15 million, surely only a fool would take the odds of 11%. This would require a historic bidding war and a sale far above Golden's top estimate of 12 million. Traders view this as a long shot bet. That worked rather well. The person won 265,000. Oh, that's nothing. I thought they were going to say they made like millions or something. But apparently not. Oh, the news is fucking garbage, dude. I can't get over it. Bro. The news is so bad. Alright, let's see what fucking Michael Burry has to say. Even though I don't really give a shit. If Ryan has GME buy any version of BBBY, I'm out. Well, good for you, Burry. Nobody gives a shit. Nobody gives a shit. I wouldn't care. I would literally care zero if Burry sold. What does Burry have to do with anything? Bro, this is such a slow stream right now. Yeah, I don't know. I don't know, chat. Oh yeah, someone went full Karen on Reddit. I don't know if anyone saw that. I guess some dude made a comment about Ryan and his dad or something like that. And some dude on Reddit went full Karen and wrote like an email to their boss. Like, that shit is fucking insane, dude. Full on Karen, bro. Full on Karen. Says, I'm writing to you as an individual retail investor to formally and justifiably raise concern regarding Fox Business Network on air censor senior correspondent Charles Gasparino. You may not be aware, blah, blah. Yeah, I don't want to read this. Just seems like some Karen shit. Some straight Karen. And it's funny, there's people in the comments like, yeah, good job. It's like, nah, that dude's a fucking Karen. That dude's a Karen. Didn't bother reading it. Yeah, I don't want to read it. I'm not in the, I don't know. We need to find like a video to watch or something. I'm just like not in the mood to read. I can just play some Rocket League for a minute. I know you guys hate gaming, but there's nothing else to do. No, I'm gonna play Pokemon actually. Update. Trade GME on Coinbase. What? Since when can you trade stocks on Coinbase? What? When did that become a thing? Fuck if I know. I don't even know. I don't know Coinbase was a stockbroker now. I would never keep my stocks in Coinbase, but whatever. This guy has no rank. I'll go first, I guess. Oh, nice. I got a Cyndaquil and a Dreepy. Nice. And I'm facing a Charizard deck, which can sometimes be good if the person knows how to actually play it. But this guy is pretty new, I think. So he's probably not going to know how to play. Come on, dude. It doesn't take this long to pick a card. You can tell when someone's new by how long they take. I seriously might just leave this match. This dude is slow. Slow. Why do I get to draw? I don't really understand that rule. I don't know why I get to draw 3 cards there. Oh, he's got a Dust Skull. Okay. I guess we'll throw a Bravery Charm on that just in case. I don't have an energy card. No. I need an energy card. There's no point in going first if you don't have an energy card. What's up, Hugh G? It would probably better go to second for my deck. Most likely. And Charizard and a Dust Skull. This is going to be tough. Maybe. We'll see. That Charizard's really good. Hopefully I draw an energy card. That'd be a clutch draw. So I can only hit 40. I think it'd be clutch to could use Technical Machine. That's what he's gonna do, it looks like. He's gonna evolve those 2 Charmanders into Charmeleon, and then he's gonna have 2 Charizards next turn. Ugh. Not good, not good. I gotta figure out something here. Oh, he didn't evolve the chart. What? Why wouldn't you evolve the 2 Charmanders? Why would you evolve Pidgeotto? That doesn't make any sense. That doesn't make any sense. Ooh. I'll take the Dracoloak. Then we'll use Artisan to get another Dreepy. We'll use Ethan's Adventure. And we'll get 2 Quillavas and a... what is this gonna hit? 60? I actually want to get a Typhlosion here. So I'll evolve this. Use the rare candy to evolve the Cyndaquil. Use the ability here to get another Ethan's. Oh, one of my Ethan's is a prize card too. That's not good. I'll use Festival Ground to get rid of his Artisan. And then Energy and kill his Duskull. And hopefully we pull Ethan's out of my prize cards. Damn it. That's okay. We'll get it. Yeah, this is TCG Live. Got a bunch of code cards. Pokemon I've seen Pokemon Pocket. It's kind of weird. It's not really the same. But Pokemon Pocket's chill. I like TCG Live because it's pretty much tournament rules. And Pokemon Pocket has their own, like, packs and stuff. Like, TCG Live is, like, the real world cards as well. Like, you were able to play with the Ascended Hero cards before the box even came out, which is pretty cool. What is he about to do with Dusclops? Put 5 counters on one of your Pokemon. Okay, that's fine. He's getting a Charizard out. Not good, not good. I'm not in a good position for this. That Charizard is so good. Oh no. We might take an L here. I don't know. Might take an L. Because he's going to put a... Yeah, this isn't good. This is not good. Reach prize card, so it's going to do 210. Oh, fuck. And he has maximum belt. Oh, that's going to do a lot. Ugh, this is bad. This is bad. Let's see. What could I do? I can only get my Typhlosion to hit like 220. So that's not really enough to sacrifice. Fuck. So bad, so bad. This is so bad. Alright, let's use this. Get an Ethans. I don't know how I'm going to win this without all of my Ethans. This is going to be a tough win. Counter capture. Ooh, let's use Super Rod, actually. Because then I can get my cards back. Nice and convenient. Gotta love Super Rod. Use this Recon again. Sacred Ashes. Yeah, I'll get that. Yeah, I'm gonna need Sacred Ashes because he's gonna kill another thing, I'm sure. So we need Cyndaquil. We need 2 Cyndaquil, or yeah, this is. I gotta go 2 Cyndaquils and hope he doesn't reshuffle my hand. If he reshuffles my hand, I'm fucked. But I gotta put damage on that Charizard. Did I use... Okay, I used that. So Typhlosion. And we'll put some damage on his Charizard. But this is bad. This is really bad. Yeah, and he's getting another Charizard out too. Fuck. No! You son of a bitch, dude. Okay, at least I drew Quilava. There's a chance. There's a chance. A Dusknoir? No! This is so bad. 13 damage counters. Okay, that's not that bad. He can only really kill one of these. Ooh, that's actually really good. I could kill the Mew for 2 cards. 2 prize cards. That actually helps. And I could kill Pidgeot. I can one-hit Pidgeot. Okay. He's actually set me up to potentially win now. If he would have just kept the Dusknoir and the fucking Charizard on the field, he probably could have won. Okay, that was a waste. Ethans, damn it. I need my Ethans, bro. Yeah, I think he screwed himself by doing that. He should have killed one of my Cyndaquils. That would have been the better play for him. Yo, why is the stream like fucking dead today, bro? Oh, man. Yeah, the stream's hella dead today. Pretty whack. Pretty whack. I gotta send out Dracoloak. Gotta sacrifice him, unfortunately. I need Ethan's. Ethan's Adventure. And we'll go Buddy Poffin. Boom, boom. And then throw that. Throw Ethan's. We need 2 Quill Lavas. And oof. Tough. I already got a Typhlosion, but I need 2 Typhlosions. Wait, what other cards do I have? I do have Ultra Ball. I do have Arven. I will do my energy card. Throw Quilava out. Wait, oh, this is so bad. I might lose. I don't think I have another Ethan's. I think it's in my prize cards, so I'm screwed. If I win this, it's a miracle. Fuck, dude. Everybody likes to collect shitty cardboard. Nobody likes to play it. I like to play it. The actual card game's the only reason I'm even remotely interested in Pokemon at this point. So he's going to kill my Dracoloak. I send a Typhlosion, kill his Charizard. He sends this, kills my Typhlosion. I'll be at 2 prize cards, he'll be at 1. And I should be able to one-hit his Mew with Boss's Order. So I should be able to win. Assuming he doesn't do anything crazy here. The clutchest play he could do right now is retreating this Charizard for this one. If he does that, I lose. I think there's still a way I could win, but I think if he does that, I lose. But I don't think he's going to do that. He probably doesn't see that play. Most people aren't aware enough to retreat their monsters. Yeah, he lost. Unless he has something else. But I'm pretty sure he lost. I don't think there's any path to victory for him now. He kind of screwed it. So Typhlosion, kill his Charizard. Oh wait, I'll use Arven. So I can, do I have Redemption Ticket? Yes, I need Redemption Ticket and a Max Belt. Redeemable Ticket will make it so I can get my Ethans. Because that replaces your prize cards. Or lets you shuffle your prize cards in and pull new ones. So now I'll have the other Ethans. I should. Yep. Perfect. Perfect. And now we kill his Charizard. And that'll put us at 2 prize cards. And we should be able to win here. I might be able to even kill his other Charizard. Most likely. We'll see. I don't think he can win. I don't think there's any way for him to win here. Especially now that I got Ethan's and 2 Quilavas, it's over. Oh shit! Oh shit! He just won. He just won. Damn, he just won, bro. No! Oh, I hate this guy. I hate this guy, bro. No. Alright, I'm done. I'm done with this shit. Oh, that sucks. That sucks. What's up, Rosh? Rosh. The Germans are insane, bro. Like, you're the chillest German ever, bro. Those Germans in the stream yesterday fucking sucked. You're like the chillest German ever, you know that? Those guys were so weird. I'm glad I know a chill German. That's all I'm trying to say. I'm glad I know a chill German, because those guys had zero chill. Gotta deal with these people every day. I'm sorry, bro. I'm sorry. Pumped to be able to play Pokemon Fire Red on my Switch. Oh yeah, that's coming out, huh? You sell on Whatnot? No. I don't have anything to sell on Whatnot. Hooked on Pokemon Adventure Red Chapter? Pokemon Adventure? Pikachu Power Pack's coming Friday? Oh, is that what the Lightning Pack is? I need a jacket, one sec. It's cold. It's cold, I need a jacket. Wasn't the Lightning Pack supposed to come out like a week ago or something? About a week ago! You can't even think of how dumb they are. I got a pretty good glimpse yesterday. I don't think you were here. But, well, I saw you come in during the earnings call, but bro, after the earnings call was insane. They got real quiet. They got real quiet when I mentioned the war, though. Everyone was talking shit up until the point I mentioned the war. And then it was silence. They did not like that. They did not like that. I assume they just put out a tweet, a new pack arrives this Friday for a limited time, and it shows a few hype Pikachu slabs. Interesting. Nobody posted it on Twitter or on Reddit. Everyone's posting about Burry for some reason. Oh, it's right here. New pack arrives this Friday for a limited time. That's cool, I guess. Will I pull one? Probably not. I guess it depends how much it is, actually, but I'm probably not going to pull one. Pokemon Adventure Red Chapter goes off the manga. It's different, worth checking out. Pokemon. I haven't even been playing Rocket League, bro. I had my little My little video game moment. Didn't last very long. No, it's literally just fucking Pokemon Red. I think. No, what the heck? Never mind. It's a little different. Looks fun though. Looks chill. Oh yeah, you guys would be proud. I asked the girl her name today, and then I just walked away. Dead ass. Pretty funny. Bruh. she didn't seem interested, so I just walked away. I just didn't give a fuck. Did you count down from 5 like GME BB suggested? Nah, I just asked her name. She was like hella quiet. So I just walked away. Like legit. I was like, I am not putting any effort into this. It was a good move actually. It was a good move. Cause now I have no desire to talk to that girl, so it worked out. I'm not interested in people who don't know how to communicate. But I mean, it was I don't know. Approaching girls at the gym is retarded. Like it just seems awkward. So I'm glad that's over. It was pretty interesting seeing attraction go in the snap of a finger. So that's my plan going forward. Anytime there's a girl I like, I'm just going to ask their name and I'll immediately know if it's just bullshit or not. If I actually like them or not. It worked out really well. Because now I don't really care at all. Alright, didn't I ban this guy? Well, now I'm banning you forever. You know MSTR is garbage. I don't know why you come in my stream and ask that. So now you're going to be banned forever. Crypto's shit. Was she a 10-footer? 8 out of 10 from 10 feet out, but when you get up close, she's a 4? No. She's attractive. I'm not going to put in effort, bro. I'm not putting in effort into people who don't. Yeah, I'm just not putting in effort. I don't care. The only reason I get on this stream every day is because you guys put in the effort to be here every day. Well, some of you. But if it wasn't for that, I wouldn't come on this fucking stream, dude. Like I'm done putting in effort for like anything. What about Intel? Is it garbage? I don't know. I haven't looked at Intel in a while since the earnings. I don't like the Intel investor base though, so I would never invest in it. But Intel in itself, I have no clue. What's it at? No, I think she's pretty attractive. I'm not willing to put in any effort. I don't care. Like, the second I realized she didn't want me to talk, or the second I felt like she didn't want me to talk to her, I just walked away. Because I'm not putting in effort. I legitimately don't give a fuck. If there's no, like, if there's nothing there, I'm not doing it. I don't have time for, I mean, I do have time for that, but I just don't care, dude. I just legitimately do not care. 230 billion market cap. That seems overpriced, doesn't it? I guess they made 8 billion last year, so that's good. Let's see. Okay. Yeah, I mean, Intel looks fine. It's probably maybe like a little bit overvalued, but I mean, Intel at 20 bucks was a fire buy, I'm sure. Looking at the fundamentals. But Intel looks fine. I'd rather buy GameStop, but Intel looks fine. At least they make profit. And a lot of it. How's GameStop going? It's investing. It's investing. I've only been in the play for like a year and a half. That's not very long when it comes to investing. But GameStop's going great. It's not down 60, 70% like a lot of things. And that's really all that matters. I look at this as a pre-game lobby while just hanging out waiting and accumulating for the game begins. Hey, fair enough, fair enough. I just know there's just a lot of people who've put a lot of effort into this stream, and I'm not, even though there's days I don't even want to do this, I'm not gonna not show up because you guys show up for me. And that doesn't happen in life. Nobody shows up. So the stream's really all I got when it comes to people showing up. Every time I stop caring I got a girlfriend the next month or so, it's like an algorithm. I mean, I've honestly I've stopped caring a long time ago. But I don't know. Like the last girl I talked to at the gym, I didn't even ask her name or anything, but like me and her like actually had like a conversation for a minute. Like that's cool. If I have to go up to some girl and she's like, you can tell that she doesn't want me to be there, like I'm not fucking putting in any effort into that. It's just dumb. It's a waste. It's a waste of mental energy and time. But I'm glad I did it, because now I know. Now I know. And like I was saying earlier, that's what I'm going to do next time. If there's a girl I have a crush on, I'm just going to go ask her name and I'll immediately know. It's simple. It's simple now. The truth has been unlocked. The truth has been or I don't know if that's the right saying, but I just see I'm I don't know what I'm trying to say here. I've been enlightened. Think of the end stream though, when this thing finally moves. Cordell's gonna have his rag to riches moment. These stream days could be the preamble to the greatest days of your life. I hope so. I honestly hope even after that I can still stream. You know? Like part of me, you know, when I get rich, if I'll never say when, even though I do it all the time. If this does work out and I do get rich, you know, I've said I probably would quit the stream. But I don't know. I don't think I will. I'll probably keep going. Guess it just depends what happens though. What's up, William? Hit it and quit it? Nah. I'm good. What's the point of hitting it and quitting it? It's a lot of effort to get a little pee-pee wet. It's a lot of effort just to get your pee-pee wet. Not really interested. What, did you get sprayed with the adhesive, kitty? Is that why you smell like fucking glue? That shit stank, kitty. You smell like glue. My cat has like this fucking lump on her stomach and it's been bleeding like crazy. It's annoying. I just got new sheets like for Christmas and they're already just destroyed, like covered in fucking blood and shit. It's so annoying. Can't have anything nice. Can't have anything nice with a bleeding cat. That fucking shit stinks though. Smells like glue. What's up, Ruben? How you doing, Ruben? I wonder how popular this will be. I don't know if I even looked it up on Google Trends. Fslr. Yeah, it doesn't have really much search. I don't know why I'm doing this stream for this one. Yeah, there's no interest in this. Why am I doing a Fslr stream? There's no interest in it. Ugh. Let me see what other earnings calls are going on today. Excuse me. Damn Germans yesterday. Bro, the Germans pissed me off, bro. The Germans pissed me off. So annoying. Shout out to Rosh, though. Rosh is the coolest German ever. Varley! What's up, Varley? How you doing, bro? There's no interest in Workday either. I don't think there's any stocks reporting today that people are actually interested in. HP? Is that the computers? Oh, that's in the shitter, though. I mean, what is this? Why is HP? Let me see this. I need to research this for a second. Why is that so bad? Fresh 10K. They made 2.5 billion last year. 40. Well, this is undervalued. They don't have any stockholder equity though. That's the only issue. This is potentially undervalued. No stockholder equity though. GoDaddy. Is that a stock people like? GoDaddy? Nope. Don't look like it. Yeah. We'll just run first Fslr, I guess. I don't think it'll be a great stream. But it's all good. I was so surprised these fuckers know that stock. Thought they all buy Google and Nvidia. I guess not. I guess not. Kind of easy to read that language though. It's close to English. After we were talking about Corsair, they had a good spike. I was waiting to get paid to buy some shares, and the day I got paid the spikes, I was pissed. We talked about. I talk about a lot of stocks. I don't really remember talking about Corsair. What do you mean it spiked? It's not even up. Oh. I just had an earnings spike. Doesn't really mean much. If you're worried about this little move here, you're probably not investing in it for the right reasons. Just saying. How come they haven't posted the 10K? That seems ridiculous. I mean, it's still trading below its stockholder equity. So it's still technically potentially undervalued unless it lost a bunch of money again, which it probably did. More than likely. They increased their stockholder equity though. So that's positive. And they made a wow. I mean, Corsair is a decent investment, actually. They posted profit. That's crazy. That's crazy. Decent investment. Not terrible. Trading below book value. If they post another profit this year, pretty solid. I think it was brought up as a possibility for acquisition at one point. Oh. I mean, it does look, I mean, it's trading below book value. Technically, it is a good, I mean, it is probably one of the better investments, and they just posted a profit. That doesn't happen. 60% jump. It went from $4 to not even $7. Is that 60%? Might be. Either way, it's still trading below book value. So seems fine to me. If you think you were gonna bottom snipe this, I mean, I think that's a bad habit to have with any stock. Check Klarna. Klarna's shit, if I remember right. Pretty sure we've looked this up before. I think Klarna's garbage. Klarna's the shit? We'll see. We'll see. I don't know about that. The chart doesn't reflect that. No, it's not. I can't even research it. It's some Chinese shit. Or, you know, it's not in the US. UK. Can't even research it, so unfortunately, I don't know if it's good or not. I mean, maybe you could go to their investor relations and see, but they posted earnings February 19th. I don't even think this is a profitable company, but I can't see a balance sheet. Oh, right here. Here it is. Earnings release Q4 2025. Right? I mean, they might make profit this year. They went from losing 100 million in 24 to only losing 11 million last year. So they might post a profit this year. Potentially. Oh no, they lost way more than. Yeah, I disagree. That does not look good at all. In millions, 18 billion in asset. Is that 18? Yeah, 18 billion. What is their market cap? Yeah, that's not it. That's not it. There's a reason why the chart looks like this. It's a gigantic company. It's not gigantic though. 18 billion in assets and 16 billion in liabilities. That's not gigantic. And they don't even make profit, so that's not really it. It's cheap right now. Cheap doesn't mean good. Cheap usually means dog shit. Everyone in Sweden's using Klarna. Yeah, but that doesn't matter. I just looked up their balance sheet and they don't even make profit. And it's sitting at 5-6 billion market cap with only 2.5 billion in equity, stockholder equity, so it's not undervalued or anything like that, and not making profit. There's a reason why the chart's shitting. I like investing in businesses that make profit and are going to grow, not the idea of a company that could make profit and could grow. I'm not interested in that. I like real businesses that actually make profit. But can't even really research it properly because it's not even a US company. So who knows if their numbers are even legitimate. I disagree. From the 2 minutes of research I did there, I disagree. You can't be. They're not. You can't be losing 200-300 million a year, and like expect anything. I'm not interested in that. If you're interested in it, good luck. Hopefully it works out. But I'm not interested in businesses that don't make money. Klarna's around since more than 10 years. I have no clue. Looked into Klarna, had an issue where people were not making repayments. They would sell the debt to collectors, and that's how they're burning cash. I could be wrong. Yeah, I have no clue. I have no clue. I'm not interested enough to look into it. It's not even a US company. Like, it's just not it. Not it. Rackspace? I've never heard of Rackspace. Excuse me. Check out A Lab? That sounds like some biotech nonsense. You're telling me to look up some biotech? Oh, it's a semiconductor company? Yeah, that's not it. Anything semiconductor is most likely overvalued. I'll entertain it for a second, but I can already tell you. It's probably not it. At least they post a profit. For once. Yeah, this is trading at 21 billion market cap with no. I'm not it. Not it for me. Decent though. At least it's a decent business, but the stock's overvalued compared to the business from my perspective. Hope it works out in 10 years. I just witness how good and how people are using them on a day-to-day basis. I mean, my only issue with that is, like, and I'm not just saying you, this is people in general. This is how people got into crypto and are now getting shit on. This is why people buy terrible companies and get shit on, because they have this, like, opinion on the company, and they have this opinion of what they think the company's going to do. But when you go and look at the financials, it just doesn't really align with that vision. And, from my perspective, the stock's already overvalued. So I just don't see how something that I think's already overvalued is going to be worth a lot in the future. I just can't see it. The financials don't add up to like the opinion of, you know, that's going to be gigantic. It just doesn't. So, you know, that's my only issue with that. It, you know, and it's not just you. That's how most people invest. Most people are like, you know, buying whatever because they think it's a good business, or and maybe it is a good business, but the stock is still overvalued compared to the business, so it's not a good investment in my opinion. I'd want, you know, if I was going to invest in anything, I'd want to invest in it at fair value or underpriced, not potentially overvalued, because there's no gain there. Like, what do you expect to gain buying something that's potentially overvalued? That's kind of just, but you know, I hope it works out for you. I'm not trying to, you know, I'm trying to help more than anything. I'm not trying to like shit on your investment or anything like that, but this is just common with a lot of people. A lot of people just like build these like opinions, and it, you know, it just doesn't necessarily reflect what I feel like the future looks like. When a company's losing $200-300 million a year, it's not going to grow. It's impossible. It's literally impossible. Unless I read their financial statement wrong, that's potentially, you know, potentially, but I don't think I read that wrong. Good part of investing for sure, but always challenge your bull thesis with exposure to the ultimate bear thesis. Yeah, exactly. You can never be 100% certain on something, even if it's GameStop, you know? Waiting under 10 to make a huge investment right now, just enough position to commit on tracking it. Fair enough. I bought GME when they lost 500 million. So good luck to everybody, no matter the stock. Yeah, but GameStop was a trash investment back then. Like, sure, it's working out now, but when GameStop was losing all that money, it was a garbage investment. It was terrible. So, like, I understand that, but that is a perfect point to exactly what I'm saying. You know, everyone believed in Ryan Cohen and thought it was going to work out. And sure, it's working out now, but guess what? They're making profit now. When GameStop was losing all that money, it was a garbage, overvalued stock. Garbage business, overvalued stock. And look what happened. You know, it went from $100 to 10 in the span of 4 years or whatever. So, like, that is a perfect example of why you don't buy things that are overvalued and losing money. It's a perfect example. GameStop has been nothing but a good investment since it started becoming profitable. But you didn't need to buy GameStop when it was losing hundreds of millions of dollars. You know, all you had to do was wait for them to pull the profit, and it's been a good investment since then. Unless, you know, you bought the day of the squeeze. You know, if you bought when Roaring Kitty came in, I'm sure you're clapped, but if you were looking at it just from a financial perspective, I mean, the second they posted a profit, it was potentially a good investment. And to see the investment for 2021 or 2020, 2021, that was you just had to you just had to believe in the company realistically that they could survive. That was a completely different investment at the time. I don't think before, prior to the squeeze of 2020 or whatever, 2021, whenever it squoze, I don't think GameStop was like a forever investment then. I think it was more of a trade. But now, now that it's profitable and growing, even while cutting stores and cutting costs, it's now it's potentially a forever investment. And it's decently fair valued. I mean you could argue GameStop stock is still overvalued, which I wouldn't disagree. I think potentially it kind of is in some ways, but also at the same time it's not. There's a lot of there's a lot of arguments on why it's not as well. But the future looks great. Buying at $20, even if buying at $20 is still potentially overvalued, in 2 to 3 years, it's going to be basically a risk-free trade buying at $20, in my opinion. There's not many companies you can say that for, because most companies are extremely overvalued, and it's just, from a financial perspective, seems almost impossible for those companies to grow. And even if they do grow, are they going to grow at a fast enough rate to reflect their current valuation? That is highly debatable. Could have saved the money and I bought it. No, let's see. That's why I brought it up. I was very financially uneducated back in 2021. Yeah. I mean, I'm relatively new to fundamental analysis. I'm relatively new to fundamental analysis, so I'm not saying I know everything, but I've been a I've been doing this trading shit for a long time, so even before I understood valuation, I understood market mechanics and I understood trading and how people view the market. So now that I understand that, with that knowledge on top of fundamental analysis, I don't know that I'll ever make a bad investment decision ever again. Like straight up. I don't know, we'll see, 20, 30, 40 years down the road, and maybe I'll buy something else besides GameStop and we'll see, but I don't I feel like I have a relatively good grasp on investing. I mean, shit. I think crypto should, if you were here when crypto was at all-time highs, I think that should tell you enough. Like, I was literally the only person saying that crypto was a terrible investment, and then it was the easiest short ever. Did I short it? No. I didn't short it, but I just know this game, man. At this point, I know this game so well. PayPal flying. It's okay we read on this link. If not, it's all good. You can't post links in the chat, so you just got to tell me what to look up. But if it's just some article about Klarna, I don't want to read it. I'm not interested in the opinions of other people. I can look at a financial statement and develop my own opinion. I don't need someone to like You know, I don't need someone to hold my hand. So if it's like if it's an article about Klarna and just someone's opinion, like I'm not interested. I don't. When it comes to stocks and investing, I honestly don't care about other people's opinions because they're the majority of the time they're wrong. Stripe talking about buying PayPal. Yeah, I didn't think GameStop would buy PayPal. That'd be a terrible investment. I need to go to the bathroom real quick. I'll be right back. I'm back. I don't remember who it was, but it's kind of similar to that Carvana thing we were talking about the other day. You know, someone in here was saying Carvana is like a terrible business, and they had me read this research report. And, you know, this research report had all these points on why Carvana was trash, but literally since that article got posted, Carvana stock has only gone up and their financials have only gotten better. So like people's opinions when it comes to art, when it comes to stocks and business are honestly just completely irrelevant. If you can't like form the vision for yourself by doing your own research and trying to, you know, build a narrative for yourself, it's probably not what everyone else is saying it is. It's maybe, you know, maybe, but in my experience, most people have no fucking clue what they're talking about when it comes to investing or business or anything for that matter. Most people just repeat things they see on whatever they read. It's very rare you find someone who like forms their own opinion based off of their own research. It's very rare. And sure, you could argue, you know, reading articles is research, but how many GameStop articles have we read? Hundreds? Probably hundreds. How many of them have been even relatively accurate? One, two, maybe. Maybe. Like reading articles just isn't the best research. It's just not. You're just reading someone's opinion in a lot of cases. And like I said, I'm not trying to like shit on your investment or anything like that. I'm just trying to, you know, maybe there's someone out there who's listening and maybe they take in what I'm saying into consideration. And the next 10, 20 years of their investing career, they absolutely fucking crush. That's all. That's the only reason I'm even still talking about this. Because I think if, like I said, I think I have a really good grasp on investing, and I feel like I understand this space really well. So I think anyone who listens to me will be very successful. But it doesn't mean I'm right. I could be wrong. You know, time tells all. Time's the teller of all. But my track record has kind of, you know, I'm not trying to gloat, but like, I've even proved to myself that I know what I'm talking about. So if I've proved it to myself, you know, I don't need to prove it to anyone else. I've been in this game for years. I've been through 3 bear markets now. Like, I've lived a lot of life in my short investing career. I have a pretty good grasp. Like, yeah. That's all. I'll drop it there. I'll drop it there. No love lost. Good, bro. Good. Glad to know. Some people don't like my which is fair, you know. I'd be pretty upset too. I'd be pretty upset too if there was someone like me. You know, I'd be pretty upset too. So I'm glad, you know, there's people out there that can actually listen to what I have to say and not get upset about it. Carvana at $4 was at the edge of bankruptcy. Hog? Getting you a Harley, boy? How come nobody's paying attention to us? I mean, it's been at these low prices before. I feel like you'd have to do a little bit more research on this one. Ooh, excuse me. Excuse me. Excuse me. They posted earnings a little bit ago. They haven't posted their 10K though. Let's see. Yeah, they're losing money, that's why. And it's not like they went from losing 193 million in 24 to 361 million last year. Oh, that's just for the quarter, I think, too. Okay, yeah, that's just for the quarter. Okay. So they made 387 million profit last. Okay, that doesn't seem that bad. Their revenues are going down. That's a quarter though. But still their revenues are going down. So lack of sales potentially. Nobody's buying Harleys. They don't have a really good balance sheet here. That shit's funny. That shit funny. Declares dividend. Here we are. I'm trying to find their stockholder equity or their they don't have like their assets and stuff. Oh, here it is. Oh wait, that's a 361 million loss? That's the quarter though, I think. Okay, here we are. So you got 3 billion. Wait, is that 3 billion cash? Whoa. Trading under their cash somehow. Yeah, something about hogs. There's something here. Losing a lot of the only issue I see with Hog is their net income and their revenues declining, but potentially undervalued. I mean, they're sitting on 3 billion cash and 2.3 billion market cap. There's definitely something there. There's definitely something there. They paid off a lot of debt too since last year. Yeah, there's something there. Hog is pretty interesting. The chart looks like shit, but it seems undervalued. But I don't know. That's tough. That's a tough one. That's a tough one, but it seems undervalued. just based off the cash alone. They have so much cash. Unless they diluted their shareholders, that's possible. I don't know how they got all that cash. They could have diluted. That'd be an issue. That's probably how they got it, honestly. It's the only thing I can think of there. But I don't necessarily see any issue on that one. Oh, excuse me. Bought it from 20 to 70 and sold it. I thought better put that 150 euro in GME. Nice. Some hog. The hog. Yeah, there's definitely something there. Maybe that's what GME is gonna buy. Harley Davidson. Since we just like talking about random things, you know, they're gonna buy Harley. Ugh. Was in the other room, but heard GME Harley. I'm in. I was just joking. We just looked up Harley. We just looked up Harley, and it seems like maybe undervalued. Maybe. It's also hard to invest other stocks right now because, you know, just buy more GameStop. It's pretty hard for me to invest in other things, but Harley does look interesting, for sure. Harleys are kind of collectible. Oh yeah, for sure. For sure. But if they're, if their sales keep declining, that's probably not good. But, it's also wintertime. Who knows? Maybe, summertime comes around. Maybe it makes a comeback. You never know. You never know. But they also don't have their actual 10K up, so I think I analyzed that correctly, but until they have their actual 10K up, it's up for debate. But just the cash alone, 3 billion cash, 2.3 billion market cap, like something's there. And they're profitable. I forgot what their stockholder equity was. But I think their stockholder equity was relatively good too. It's just, what are they going to do with that cash, though? How did they even get the cash? It would be a lot of questions before I would invest in that. Off the 2-3 minutes of research, it looks good. But that's when you dive in a little bit deeper, I guess. You know, if you're going to make the investment. Obviously, I'm not going to make the investment because I would just buy more GameStop. But if I was going to make the investment or potentially make the investment, I would go research a little more. Answer the questions I have. Because the financials look fine. It looks like throughout history, though, that chart's been relatively volatile through time. Because I think at 2010, it hit like $10-15. There's a couple times it's been that low. So it could be a volatile chart as well. And that could be why it's selling off, rather than because it's trash. But it could be trash. You never know. Can't really form a valid opinion off of 3 minutes of research. But it's a good way to form a quick opinion of whether you should, put in more effort. It's kind of like picking up girls at the gym, you know? How much effort do you actually want to put in? Seems they need that cash for the loans. Yeah, maybe. They did something because they paid down a bunch of debt and now they have a bunch of cash. So there's something going on there. Whether it's bad or good. Like I said, you'd have to do a little more research to figure that out. But even whenever I research something like that, it always goes back to I'd rather just buy more GameStop shares. There's no, in my opinion, there's no benefit in diversifying. Unless you're just trying to make a quick trade in hopes to buy more GameStop shares, but that could potentially not work out. One more minute till the market closes. I don't even know if anyone's going to show up for the first Fslr stream here. I don't think this is a stock people care about. Fslr had its moment. I remember when Fslr was really popular, around when I first got into the market. But I don't think anyone gives a shit about Fslr anymore. Just one I've been side-eyeing for a long time. That's a definite boom or bust situation there as it keeps falling. Yeah, definitely. Like I said, there's something. It's either a really good investment or something sketchy's going on. I'm pumped for full solar earnings. I'm all in. All in. All in. Yeah, I probably won't even, unless there's a lot of people, I probably won't even react to this one. Just snipe for solar cards before the bell. Damn. Baller. Baller. Shot caller. 20-inch blades. On the Impala. Now hit the highway. Making money the flyway. But there's gotta be a better way. Better way. Better way. Get money to fly away. Damn, they already reported? Oh no. Make money to fly away. But there's got to be a better way. Better way. Better way. Actually, I'm just pumped for the after hours move and your lose the house clip. I don't know if I'll do one for this one. I don't think anyone cares about this stock. Ready to lose the family jewels? Can you even afford to lose? Who funded you this time? BlackRock, baby. BlackRock. They got me back up. They got me ready for this loss. Got a $16 million loan from BlackRock, and I put it all on First Solar. Shout out Larry Fink. Shout out Larry Fink, man. Coming in clutch with that $16 million loan. You know what it is. Yeah, I probably won't even do the stream clip for this one. There's nobody here for this. There's no way there's someone streaming this besides me, right? Oh. It's that same fucking guy, bro. Stealing all my views. With his botted ass stream. Oh, there it goes. There she goes. There she goes. There she goes again. How come every earnings report we fucking do is the just shits? Every single one, bro. Every single one shits. Like without fail. I'll try posting the stream clip. Just to see how a terrible company, you know, a not popular one does. Oh my god, First Solar's down 9%? I just lost everything, dude. I bet everything on 10%? Make it stop! No! No! 12? No! So stupid, bro. So stupid. So stupid. It's so stupid, bro. It's so stupid. My wife is gonna kill me. Oh, man. It's just gotta be short clip. The shorter the better. Or I would say around like 10-15 seconds is what you're looking for. You know, people got short attention spans, you know. That was good. Rate it. Rate it out of 10. Rate that one out of 10. I felt like that one was decent. Give it a rating. Too bad it's for a terrible stock nobody cares about. But I think that one was pretty good. Just to see. Oh my god, first. Oh my god. Oh my god, First Solar's down 9%? I just lost everything, dude. I bet everything on 10%? Make it stop! No! No! 12? No! So stupid, bro. It's so dumb. It's so dumb, it's funny. It's so dumb, it's funny. Make one without words, only tears. I wish. I don't know how to make myself cry. I don't know how to make myself cry, bro. I wish. Dude, it's down a lot, though. It's down 14%. Holy. Holy. That is quite a bit. Cut an onion. Onions don't make me cry. I've cut a lot of onions in my lifetime, and I've never got teary-eyed. Did I really not make that vertical? God, I hate when I do that, man. I absolutely hate when I do that. Eat a ghost pepper? You'll see me dying. I won't be crying. I'll be legitimately dying. My butthole will be on fire. My booty hole won't be very happy after eating the ghost pepper. Be crying out of my ass. Be straight up crying out of my butt. There we go. I got it, chat. Don't you worry. Don't you worry your pretty little head. I'm getting this. Getting it. While the getting's good, I straight getting it. 'Cause the game is good. Yeah, I'm getting it. While the getting's good. Sorry, laughing. Some Visine. Get some fake tears going. Some fake tears. That'd probably be the only way I could do it, honestly. Some fake tears. My wife's gonna kill me. I think that shit's funny, but it's just not as good for the stream clip, unfortunately. Alright, I got it posted. Got it posted. Now everyone knows that I lost everything on Fslr. Maybe they'll subscribe to my Discord. $69,000 a month. It's cheap. It's cheap. Nice and cheap. Oh, I didn't even read their earnings, huh? Let me see if they posted the 10K by chance. Probably not. But hopefully. Nope, just the 8K. Just the 8K. Let's see. Fslr announces fourth quarter and full year 2025 results and 26 guidance. Net sales of $5.2 billion for 2025, $1.7 billion for the fourth quarter. Net income per diluted share of 14.21 for 2025 and 4.84 for the fourth quarter. 2025 year-end gross cash balance of $2.9 billion and net cash balance of $2.4 billion. 2026 net sales guidance of $4.9 billion to $5.2 billion. 2026 adjusted EBITDA guidance of $2.6 to $2.8 billion. 2026 year-end net cash balance guidance of $1.7 billion to $2.3 billion. That's a pretty wide range. Net sales for the fourth quarter were $1.7 billion, an increase of 0.1 or 100 million. I think that's 100 million, yeah. 100 million from the prior quarter. The increase is primarily driven by an increase in volume of modules sold in the fourth quarter. Net sales for the full year 2025 were $5.2 billion compared to $4.2 billion in the prior year, driven by a 24% increase in third-party module volume. Company reported fourth quarter net income per diluted share of 4.84 and full year net income per diluted share of 14.21. Cash and cash equivalents, restricted cash, blah blah blah, of the fourth quarter increased to $2.4 billion from $1.5 billion at the end of the prior quarter. Increase was primarily the result of additional proceeds received from our sale of our 2025 advanced manufacturing production tax credits under Section 45X of the IRS code, or Internal Revenue Code, Section 45X tax credits, and operating cash flow is partially offset by capital expenditures associated with our Louisiana facility. Our growth journey continued in 2025 with the commissioning of the new Louisiana factory and our decision to establish a new facility in South Carolina. As we navigate a rapidly evolving environment, we maintain a disciplined approach to contracting and remained anchored in our core principle of pricing and delivery certainty, a key differentiator that our customers value. From a first quarter earnings cadence perspective, we anticipate our module sales to be between 3.4 gigawatts and 4.0 gigawatts. We forecast our Section 45X tax credits to be between 330 million and 400 million in the first quarter. These factors are expected to result in forecasted first quarter adjusted EBITDA between 400 million and 500 million. Assumes 2.1 billion to 2.19 billion of Section 45X tax credits and underutilization costs of 115 million to 155 million. Assumes 110 million to 120 million of production startup expense. Adjusted EBITDA reflects add-backs of approximately 213 million for share-based compensation, Section 45X tax credit discounts, underutilization, and production startup expenses. The guidance figures presented above are forward-looking, blah, blah, blah. Okay. What is the market cap here? 26 billion? Good lord. It's not as bad as it used to be. I remember when this company was terrible. It used to be so bad. The earnings call should be starting pretty soon. This one starts early. It starts when all the other ones should start. Definitely not as popular as Hims. It's crazy that a stock like Hims gets so popular, and then a stock like this, I mean, percentage-wise, it's up relatively the same in a lot of ways. So it's kind of interesting how certain stocks get such like insane followings, but then others don't. It's pretty weird. And this stock was pretty close to all-time highs up until the report. So I you know, you'd think people would be in this, but I guess not. People don't like investing in good business, I guess. Even though, you know, I'm not a big fan of solar. At least they make money. At least they have actual stockholder equity, and, you know, at least it's a real business. It's kind of weird how people only pay attention to like terrible companies. Speaking of a terrible company, you know what stock a lot of people have been talking about recently? Fucking Beyond Trash. Oh, that report's tomorrow. Please tell me it's after hours. If Beyond Trash is after hours tomorrow, that's going to be a good one. I'll probably skip NVIDIA for that, because everyone's going to be streaming about NVIDIA. What's beyond trash's market cap? It's got to be small, right? I don't even see it. Oh, it doesn't say when they report. Hopefully it's after hours. That's the new meat. That's the new, that's what I'm gonna start calling Beyond Meat, though. Beyond Trash. Pretty accurate. Pretty accurate. Where's this earnings thing? Just waiting, I guess. Read this Yahoo thing. It says First Solar's posed for growth with expected strong Q4 earnings and significant contributions to U.S. jobs and GDP. However, current stock price may indicate overvaluation. Interesting. Interesting. I mean, that is just an AI summary, but still kind of funny. Yeah, I guess people don't care about let's see how that short's doing so far. It's probably not getting any views because I don't think anyone cares about this stock. Yeah, it's got 9 views. Yeah, it's gotta be a stock people actually care about. A whopping 9 views. Yippee. Yippee-ki-yay. Alright, this earning call needs to start. I'm gonna go eat some. Any day now. How'd GameStop do? Oh. Me. Me. Nothing special. How's Chewy doing? Yeah. Getting a little bit back on the Chewy. The Chewy. Yep. I don't know what to talk about. I'm just waiting. Check Reddit, I guess. Already know there's nothing there, though. This guy's got a lot of evolutions. Just watch the short. Yeah, too bad it's not for a company people actually care about, because that's probably the best one I've posted. Good practice for the big earning streams, though. That's fair. That's fair. I can agree with that. Obviously, they don't really do anything, though, you know? I don't feel like they're helping grow the stream or anything like that. It's driving a lot of traffic to my channel, because a lot of the Power Pack shorts are getting views from the channel page, which means people are watching probably one of those clips and then going to my channel page and watching a few other things, but it's not really helping the stream grow, doesn't seem like. So, I don't know. I'll probably keep doing it just because it's funny. But it doesn't seem worth it. Like I don't get how people get like thousands of viewers. Like obviously we've had a lot of people in here before, but I don't know how people get like it's just crazy how big streamers get. Must just be like a time thing or something. Inflated by bots. I'm sure that's part of it. I'm sure that's a big part of it. But still, they even with, you know, thousands of bots, they still probably have hundreds, if not thousands of viewers on top of the bots. But I don't know. Maybe one day we'll see. Who knows? It's also probably the space as well. I don't think people really care about investing that much. And, you know, they see someone who invests in GameStop and they think they're a fucking loser instead of wondering why someone would be talking about that. Is it starting? I don't hear anything.
Good afternoon, and welcome to First Solar's Q4
All right.
and full year
Enjoy.
2025 earnings and 2026 guidance call. This call is being webcast live on the Investors section of First Solar's website at investor.firstsolar.com. All participants are in listen-only mode, and please note that today's call is being recorded. I would now like to turn the conference over to your host, Byron Jeffers, Head of Investor Relations.
Good afternoon, and thank you for joining us on today's earnings call. Joining me are our Chief Executive Officer, Mark Widmar, and our Chief Financial Officer, Alex Bradley. During this call, we will review our 2025 results and discuss our outlook for 2026. After our prepared remarks, we'll open the line for questions. Before we begin, please note that today's discussion contains forward-looking statements, and actual results may differ materially due to risks and uncertainties. We undertake no obligation to update these statements due to new information or future events. For a discussion of factors that could cause these results to differ materially, please refer to today's press release, our SEC filings, and the earnings materials available at investor.firstsolar.com. On this call, we will also reference certain non-GAAP financial information. This non-GAAP financial information is not intended to be considered in isolation or as a substitute for financial information presented in accordance with U.S. GAAP. A reconciliation of our non-GAAP items to their respective nearest U.S. GAAP measure can be found in our earnings press release and our earnings presentation. With that, I'll turn it over to Mark.
Good afternoon, and thank you for joining us today. Beginning on slide 4, I will share key highlights and accomplishments from 2025. We entered the year under a new U.S. administration with a back-weighted shipment profile that required sustained production to fulfill contracted commitments concentrated in the second half, amid a persistently uncertain policy and trade environment. Over the course of the year, we navigated a budgetary reconciliation process, which created the One Big Beautiful Bill Act, evolving tariff scenarios, customer negotiations, and regulatory developments, including Section 232 actions, FIAC restrictions, and AD/CVD investigations that are still unresolved and could ultimately prove to be either headwinds or tailwinds. Throughout, we remained anchored to a core guiding principle and a key differentiator valued by our customers: contract certainty, both in pricing and in timely delivery. To honor our obligations, we maintain sufficient capacity to fulfill international module commitments and actively pursue various contractual protections to address shifting tariff dynamics and, in some cases, contract terminations. Given that backdrop, we took a disciplined, selected approach to customer contracting throughout the year. That approach is proving effective. Since our last earnings call, we secured gross bookings of 2.3 gigawatts, excluding domestic India volume and 0.1 gigawatt of low-bin inventory clearance. We booked 1 gigawatt in our key U.S. utility scale market at an ASP of 36.4 cents per watt, inclusive of applicable adjusters. By remaining patient, selective, and opportunistic, we capitalized on demand that recognizes the differentiated value of our product and contracting structure, strengthening the forward earnings profile of our backlog and positioning us to navigate and potentially benefit from ongoing policy and trade uncertainty. We are pleased to have delivered record sales of 17.5 gigawatts of modules in 2025. Net sales of $5.2 billion were at the top end of our most recent guidance range and represented a 24% year-over-year increase. Full-year diluted EPS was within our most recent guidance range at $14.21 per share. We ended the year with $2.9 billion of gross cash and $2.4 billion of net cash, coming in above our guidance range. Our growth continued in 2025 as we advanced our U.S. capacity expansion, highlighted by initiating commercial production in Louisiana, our fifth U.S. factory. In addition, we announced plans to onshore the finishing of Series 6 modules, initiated at our international factories by adding U.S. finishing capacity with a new facility in South Carolina. We expect production from this facility to begin in Q4 of 2026 and ramp through the first half of 2027. We also advanced our CdTe-based CuRe semiconductor platform. Following a limited commercial production run from Q4 2024 to Q1 2025, we delivered initial CuRe modules to customers in the first half of 2025. Based on laboratory and field testing results, CuRe has demonstrated the expected advantaged energy profile driven by industry-leading temperature coefficient and long-term degradation rate with improved bifaciality. These results continue to support a disciplined factory-by-factory CuRe conversion rollout expected to begin next month, starting at our Ohio Series 6 factory. In parallel with our CdTe-based CuRe platform, we advanced our next-generation perovskite thin film program. Our focus remains on efficiency, energy attributes, reliability, and a scalable path to high-volume, low-cost manufacturing of this potentially transformational thin film. We launched the perovskite development line at our Perrysburg campus and reached full inline processing capabilities in Q3, marking an important step in the lab-to-fab transferability and enabling production of smaller form factor modules using anticipated manufacturing tools and integrated processes. In late 2025, we initiated sourcing for a perovskite Series 6 module form factor pilot line, which we expect to reach operational readiness in early 2027. While we made promising progress in 2025, additional work remains before more broadly scaling our perovskite program. Lastly, we continue to actively enforce our intellectual property rights, including our TOPCon patents in the U.S. Notably, in Q4, the U.S. Patent and Trademark Office denied 3 separate petitions filed by foreign headquartered manufacturers that sought to invalidate aspects of our TOPCon portfolio. This outcome reinforces our confidence in the strength of our patent portfolio. I will now turn the call over to Alex to discuss our most recent shipments and booking activities, as well as our Q4 and full year 2025 results.
Thanks, Mark. Beginning on slide 5, as of December 31, 2024, a contracted backlog totaled 68.5 gigawatts, valued at $20.5 billion, or approximately 29.9 cents per watt. For the full year 2025, we sold 17.5 gigawatts of modules, secured 7.4 gigawatts of gross bookings, and recorded 8.3 gigawatts of debookings, primarily due to our termination of contracts as a result of contract breaches by customers, resulting in net full-year debookings of 0.9 gigawatts. We ended the year with a contracted backlog of 50.1 gigawatts, valued at $15 billion. As a reminder, the contracted backlog reflects the base ASP. A significant portion of our existing contracted backlog includes pricing adjusters that may increase the base ASP, contingent on achieving specific milestones within our technology roadmap and manufacturing replication plan. At year-end, approximately 23.2 gigawatts of contracted volume included these adjusters, which we estimate could generate up to an additional $0.6 billion, or approximately 3 cents per watt, the majority of which will be recognized in 2027, 2028. Turning to the P&L on slide 6, Q4 net sales were $1.7 billion, a $0.1 billion increase sequentially. Full-year net sales were $5.2 billion, a $1 billion increase year over year, driven primarily by a 24% increase in module volume. Gross margin in Q4 was 40%, an increase from 38% in the prior quarter. The increase was driven by a higher mix of U.S. manufactured modules benefiting from Section 45X tax credits, lower non-standard freight charges due to reduced international shipments, and the resolution of the glass supply chain disruption experienced in Q3 at our Alabama facility. These benefits were partially offset by ramp and underutilization costs to Louisiana, a higher proportion of sales into the India market, and the termination amounts recognized in the third quarter related to the breach of contracts by affiliates of BP. Full year 2025 gross margin was 41%, a decrease from 44% in the prior year. The decline was primarily driven by tariff costs, as well as the impact of tariffs exacerbating warehousing expense associated with a backweighted revenue profile, detention and demurrage, partially driven by supply-demand imbalances following certain contract terminations due to customer default, and underutilization from the curtailment of our Series 6 international facilities. These headwinds were partially offset by $1.6 billion of Section 45X tax credits recognized in 2025, relative to $1 billion in 2024, driven by a higher mix of U.S. manufactured module volumes sold. As an update on warranty-related matters, we've resolved certain claims and have continued to advance negotiations with additional customers regarding warranty claims for select Series 7 modules produced prior to 2025. Based on our settlement experience, the estimated number of affected modules, and projected remediation costs, we believe a reasonable estimate of potential future losses will range from approximately $35 million to $75 million. Within this range, we've recorded a specific warranty liability of $50 million, representing our best estimate of the expected impact associated with this issue. We're aware of certain statements, including in recent counterclaim filings by affiliates of BP, relating to overall PV plant underperformance. While we will not comment on existing litigation, we do encourage a review of our initial complaint filed last year, as well as our answer to those claims in our motion to dismiss filed earlier this month. As it relates to overall PV project output, we would note that solar plant performance relative to expectation is influenced by a broad set of environmental, design, operational, and grid-related factors. These include, but are not limited to, third-party prediction modeling, weather variability, terrain variability, local microclimates, shading and soiling, procurement and design decisions relating to trackers, inverters, transformers, and other plant components, design and construction parameters including EPC quality, DC and AC system design, construction and handling, and operational factors including tracker algorithm design and fidelity, open circuit conditions, and overall O&M scope and quality. In short, a solar plant's performance reflects its total environment and system design. As we've consistently stated, First Solar fully stands behind its module warranty obligations. To the extent a customer has a valid module warranty claim, we remain ready, willing, and able to perform our responsibilities pursuant to the procedures agreed to in our warranty. SG&A, R&D, and production startup expense total $117 million in Q4, a decrease of approximately $27 million relative to the prior quarter. The decrease was primarily driven by the reduction of startup costs associated with the Louisiana facility commencing commercial operations. For the full year 2025, operating expenses were $523 million, an increase of $59 million year over year. This includes a $42 million increase in R&D expense, driven by higher depreciation, maintenance, and utility costs associated with our research facilities, as well as increased headcount and compensation. SG&A increased by $15 million, driven primarily by higher allowance for credit losses on aged receivable balances and supplier loans. Our fourth quarter operating income was $548 million, which included depreciation, amortization, and accretion of $141 million, ramp and underutilization costs of $29 million, excluding depreciation, production startup expense of $1 million, and share-based compensation expense of $3 million. For full year 2025, our operating income was $1.6 billion, which included depreciation, amortization, and accretion of $529 million, ramp and underutilization costs of $140 million, production startup expense of $86 million, and share-based compensation expense of $19 million. Interest income, interest expense, other income, and foreign currency losses totaled $3 million in income in Q4 and $16 million in expense for the full year. Income tax expense for the fourth quarter was $30 million compared to a tax expense of $4 million in the third quarter. And this quarter-over-quarter increase in tax expense was primarily a function of Q3 benefits, including a $20 million discrete tax benefit associated with the acceptance of a filing position on amended tax returns in a foreign jurisdiction, incremental share-based compensation benefits recorded in the prior quarter. Recorded full-year income tax expense of $53 million. Q4's earnings per diluted share were $4.84 compared to $4.24 in the previous quarter. For the full year 2025, earnings per diluted share were $14.21 compared to $12.02 in 2024, and within our guidance range. So to slide 7, I'll cover select balance sheet items and summary cash flow information. The aggregate balance of our cash equivalents, restricted cash equivalents, and marketable securities was $2.9 billion at year end, an increase of $0.8 billion sequentially, and $1.1 billion year over year. Both the sequential and full year increases in gross cash were driven primarily by proceeds from the sale of Section 45X tax credits generated during the year and positive operating cash flows, partially offset by capital expenditures for our Louisiana facility. We monetized $0.8 billion of 2025 Section 45X tax credits in the fourth quarter and $1.4 billion during the full year. Notably, in January 2026, we also received $118 million for 2024 Section 45X tax credits, where we elected a direct pay option in our 2024 tax return filed in October of 2025. The sale transactions highlight the liquidity of the Section 45X tax credit sale market, and the IRS refund provides insight into direct pay election turnaround times, providing additional visibility and flexibility to optimize credit monetization and manage overall liquidity. Accounts receivable and inventory decreased both sequentially and relative to the prior year, reflecting improved customer collections and higher volumes sold. Capital expenditures were $172 million in the fourth quarter compared to $204 million in the third quarter. Full year 2025 CapEx was $870 million compared to $1.5 billion in 2024. Our year-end net cash position was $2.4 billion, an increase of $0.9 billion from the prior quarter, and an increase of $1.2 billion from the prior year. Now turn the call back to Mark, who will provide an update on market conditions, policy, and technology.
All right, thank you. Turning to slide 8, in 2025, the policy and trade environment remained complex. While we are experiencing significant direct and indirect tariff impacts, in our view, on balance, the environment is net favorable for First Solar, an example of genuine, long-standing U.S.-based solar manufacturing. In contrast, in our view, headwinds beyond reciprocal tariffs and commodity cost increases continue to build for the crystalline silicon industry. A combination of tighter trade enforcement, potential retroactive tariffs, pending Section 232 actions, expanding foreign entities of concerns or FIAC restrictions, and greater intellectual property enforcement is increasing cost, timing, and compliance risks for developers relying on crystalline silicon products with ties to China. With respect to trade, it is notable that the Trump administration has withdrawn its appeal against a U.S. Court of International Trade ruling in the Oxen litigation requiring the retroactive collection of previous suspended AD/CVD tariffs. If this ruling is maintained, which appears increasingly likely, the mounting contingent liabilities for AD/CVD duties associated with this unlawful 2-year moratorium could represent an as of yet unrealized material financial impact on those foreign producers that relied on it. In fact, one recent industry publication noted that, quote, U.S. Customs is suggesting that no panels that came in during the moratorium qualified for the moratorium. In support of true domestic manufacturing, we are encouraged by interim Treasury guidance issued earlier this month that, in our view, clearly signaled the administration's intent to address gamesmanship by Chinese-tied solar manufacturers seeking to evade U.S. regulations and benefit from tax incentives by artificially shuffling ownership stakes, voting rights, or IP licensing with the intent of evading FIAC status. We anticipate that the forthcoming FIAC restrictions will be aligned with the legislative intent of prohibiting access to tax credits for entities with sudden corporate restructuring lacking business purpose. We also commend Commerce preliminary CVD determinations issued earlier today as part of the broader Solar 4 AD/CVD investigation into Laos, India, and Indonesia, which reflect subsidy rates of approximately 81%, 126%, and 104% respectively. Note these preliminary CVD rates do not include preliminary anti-dumping rates, which will be additive and are expected to be determined in April. It is expected that final aggregate AD/CVD rates will be determined by the end of September. We expect that the final AD/CVD duties applied in Solar 4 will again support a level playing field against the illegal and unfair trade practices of Chinese-headquartered and other crystalline silicon manufacturers who strategically evade U.S. trade laws. Finally, IP enforcement must be considered within
Later,
the overall
Moose. Have a
legal
good one,
framework
man.
that includes these recent legislative and regulatory headwinds confronting the crystalline silicon industry. Earlier today, we filed a petition with the U.S. International Trade Commission, or ITC, against 10 groups of foreign headquartered manufacturers that we believe are producing products infringing on one of our U.S. TOPCon patents. Note, this is a separate action from our 3 actions seeking monetary damages against affiliates of Adani, Canadian Solar, and Jinko in the U.S. District Court. If the ITC institutes an investigation based on our complaint, we expect that the matter would be decided in approximately 18 months. If our case is successful, the ITC may issue a general exclusion order preventing the importation of infringing TOPCon products made by foreign entities, or an alternative may issue a limited exclusion order preventing the importation of infringing TOPCon products by the entities named in our complaint. In addition, the ITC may issue a cease and desist order preventing the sale of infringing TOPCon products currently in the United States. Note, the IP-related headwinds confronting the crystalline silicon industry is reflected not just by First Solar's recent victories and continued enforcement efforts, but also by the recently reported $236 million settlement entered in between Maxeon and IECO just days before a U.S. patent court was due to decide their patent dispute. In summary, the policy and trade environment, together with sustained intellectual property enforcement across the industry, have continued to generate mounting uncertainties for U.S. developers that are dependent on suppliers tethered to China-tied supply and/or IP. On the top of the technology, turning to slide 9, our strategy remains anchored in a simple premise. Customers ultimately buy lifetime energy, not just nameplate efficiency. And our roadmap is designed to optimize the balance of efficiency, energy yield, and cost, while leveraging our industry-leading thin film expertise. We continue to believe the next step change in solar will be enabled by thin film platforms, such as perovskites. We are well aware that many in the industry are seeking to crack the code of this potential next generation of advanced thin film technology. However, we believe the winner of the perovskite race will also need to have the ability to manufacture the product cost competitively in a high volume manufacturing environment. As the world's leader in thin film PV technology and the world's only manufacturer of thin films at scale, we believe we are uniquely positioned to advance this prospective device, given our nearly 3 decades of not only thin film R&D learnings, but high volume thin film manufacturing experience. Our technology strategy continues to be primarily concentrated on 2 core thin film focus pillars. Firstly, we are executing a disciplined phase gate introduction of CuRe, responsibly bringing this new technology to market with proven laboratory results and expanding field validation. Consistent with our prior outlook, we expect to permanently convert the Ohio lead line to CuRe in Q1, providing a pathway to enhance the energy attributes and competitiveness of our Series 6 platform, and then rolling out these enhancements to our Series 7 platform at successive factories. Executing CuRe remains strategically important because it is designed to enhance the attributes that translate into lifetime energy, including improved temperature response and degradation behavior, which are highly valued by utility scale customers. When adding the improved energy attributes of CuRe to the current energy advantages of thin film CdTe, such as superior spectral and shading response, CuRe can deliver up to 8% more lifetime-specific energy yield than crystalline silicon TOPCon technology in the markets we serve. Our second pillar, perovskites, is a key part of our effort to develop next-generation thin-film semiconductors that can be deployed at commercial scale in both our traditional utility-scale markets while potentially expanding our addressable market segments. To date, we have achieved reliability results we believe are comparable with best-in-class R&D efforts while continuing to advance efficiency and stability, two of the industry's key hurdles to scaling perovskite technology. A major enabler of these efforts is our dedicated perovskite development line in Ohio. As announced prior to the beginning of the call, we have entered into an agreement with Oxford PV, the holder of what we believe is the most fundamental portfolio of perovskite-related patents. Under the terms of this agreement, Oxford PV will license to us on a non-exclusive basis its existing issued and currently pending patent applications. We believe that this agreement will advance our freedom to develop, manufacture, and sell crystalline silicon-free perovskite-based semiconductor modules in the U.S. utility, commercial, and residential markets. I will now turn the call back over to Alex, who will discuss our 2026 outlook and guidance.
Thanks, Mark. Before turning to our financial guidance, I want to briefly reiterate our approach to managing the business amid a dynamic market, policy, and trade environment. We enter 2026 with a backlog of 50.1 gigawatts, despite taking a highly selective approach to bookings over the past 2 years. We expect to continue the strategy in 2026 as we await the outcome of and impact on forward module demand and pricing from the numerous political, regulatory, and legal matters discussed earlier in the call. We believe our market position with non-FIAC and high U.S. content supply on our proprietary thin film platform remains long-term advantage, and our existing contracted backlog relative to our production capacity provides us with the ability and flexibility to be patient. Regarding 2026 U.S. deliveries, many of our customers continue to face both regulatory and commercial challenges, including federal permitting approval delays. As we previously stated, we will continue to work with customers to accommodate schedule shifts where possible, consistent with our philosophy of supporting our long-term partnerships, even where we are not contractually required to do so. We enter 2026 with a fully allocated position for our U.S. production. Given tariff uncertainty, our India production is assumed to be sold into the India domestic market. We'll continue to monitor opportunities to export products into the U.S. where it is margin accretive to do so. Our guidance assumes our India facility operating at full capacity with the ability to flex production as needed through the year in response to changes in demand signals. Demand for our Series 6 international products produced in Malaysia and Vietnam remains constrained. Our decision in Q4 of 2025 to establish a new finishing line in the U.S. allows us to make use of a portion of the front end of these Southeast Asian facilities, optimizing freight, tariffs, and domestic content for the sale of incremental products into the U.S. domestic market. We intend to run our remaining end-to-end capacity in Malaysia and Vietnam at low utilization rates this year, despite the financial impact of doing so, maintaining a near-term option to increase throughput should catalysts, such as the political and regulatory matters discussed earlier, drive incremental profitable demand. Slide 10 shows our capacity and forecast production for 2026 and into 2027. Nameplate capacity reflects current output entitlement at full scale, throughput, and yield, with downtime solely for planned maintenance. Production reflects nameplate capacity adjusted for factory ramp, other downtime including for technology and tool upgrades, and any planned reduction in throughput, including due to market demand. As it relates to technology, as previously noted, we expect to recommence running Series 6 CuRe products in Perrysburg this quarter. Assumed in our 2026 production forecast for India is downtime associated with tool upgrades, with the intent of beginning CuRe production on our first Series 7 line in India in early 2027, followed by the remainder of the Series 7 fleet thereafter. Additionally, our Southeast Asian capacity is reduced significantly in both 2026 and 2027 due to the removal of tools destined for our U.S. finishing line, as well as for reuse in our perovskite development work. By 2027, U.S. finishing capacity is forecast to be 3.5 gigawatts, with the remaining Southeast Asia capacity of 1.8 gigawatts for fully finished international Series 6 modules. With projected U.S. nameplate capacity of 14.9 gigawatts in 2026, growing to 17.1 gigawatts in 2027 with the scaling of Louisiana and South Carolina, we expect global nameplate capacity of 19 gigawatts in 2026 and 22.1 gigawatts in 2027. And note, we expect US nameplate to continue to increase as we drive technology throughput and yield improvements. In terms of production, as previously noted, we expect significant underutilization of our international Series 6 facilities. India is assumed to run high throughput with the ability to flex production as needed based on local demand and international sale options. With forecasted US production of 13 to 13.3 gigawatts this year and 14.9 to 16.1 gigawatts next year, this results in total forecasted production of 16.5 to 17.5 gigawatts in 2026 and 18.9 to 20.5 gigawatts in 2027.
Peace out, Varley. Have a good one, bro.
Turn to slide 11 and other assumptions embedded within our guidance today. Expected volume sold of 17 to 18.2 gigawatts is above forecast production as we reduce inventory levels by year end. We forecast an ASP of approximately 30.8 cents per watt for volume sold in the US, slightly above our contracted backlog. This includes certain freight, tariff, and commodity recovery and technology upside. Now we expect limited ASP upside from CuRe sales in 2026, largely as a function of contractual notification deadlines relative to the timing of the decision to recommence CuRe production. Combined with India domestic sales, the majority of which we expect will book and deliver within the next year, we forecast a global ASP recognized of approximately 28.7 cents per watt. Cost per watt sold is forecast to remain relatively flat year over year at approximately 26.7 cents per watt, which includes the impact of tariffs and the impact of reshoring US manufacturing, largely recognized through ramp and underutilization expense, and excludes the benefit of Section 45X credits generated by domestic manufacturing. Including the benefit of Section 45X credits, cost per watt sold is projected to be down approximately 3 cents per watt year over year. Cost per watt released from inventory is expected to increase approximately 2 cents per watt year over year. Approximately half of this increase is forecast to come from a mix shift, as both Southeast Asia production reduces and Louisiana and Alabama increases. And the other half to come as a result of multiple factors, including increases in tariff costs, increases in core bill of material costs, increases in utility rates, and downtime for technology upgrades. Period costs are expected to decrease by an equivalent approximately 2 cents per watt from a combination of lower standard sales rate due to greater domestic mix shift, the effective elimination of non-standard freight charges as a function of reduced international product imports, reduced warehousing costs, and other period cost reductions. To provide some more color, we forecast total net tariff cost impact across bill of material and finished goods imports, recognized in both cost per watt produced and period costs toward cost per watt sold, of $155 to $175 million. Net of expected contractual recoveries on finished goods sold, we expect a total tariff impact of $125 to $135 million. This assumes a Section 122 tariff in place for 150 days at 15%, impacting all bill of materials, works in progress, and finished goods imports in that time period. In addition, certain commodities, including aluminum, are subject to long-lasting higher rate Section 232 tariffs. And note that we recognize the PLL impact of tariffs at the time of product sale. Our total tariff impact in 2026 reflects higher tariff rates paid on bill of materials, works in progress, and finished goods imports incurred prior to the recent Supreme Court decision. Tariffs also indirectly lead to underlying commodity cost pressure for our variable US bill of material, including relating to aluminum, steel, glass, interlayer targets, and spares. In addition, electricity rate hikes increase fixed costs. These cost increases are not contractually recoverable from our customers. Sales rates forecast to be approximately 1.4 cents per watt in 2026. Warehousing-related costs of approximately $200 million is down from 2025, but remains high, in part as a function of underutilization of space driven by our forecast Southeast Asian curtailment. Beginning in 2027, we expect to reduce warehouse costs to a longer-term run rate of approximately $100 million per year. Forecast ramp and underutilization expenses of $115 to $155 million are a function of curtailing Malaysia and Vietnam capacity, as well as the ramp of our US finishing line. Setup costs is expected to be $110 to $120 million, driven primarily by the ongoing depreciation and logistics associated with idled finishing equipment in transit, as well as certain tariff-related costs incurred to import that equipment and warehousing such equipment for use at our new South Carolina facility. And finally, a note on capital structure. Our strong balance sheet remains a strategic differentiator. It allows us to navigate periods of volatility, including near-term supply and demand imbalances in certain international markets, while continuing to support R&D investment, technology capital spend, and capacity growth, including localizing the U.S. solar supply chain in support of energy security and national policy objectives. We ended 2025 in a strong liquidity position and have since enhanced our financial flexibility by entering into a new $1.5 billion senior unsecured revolving credit facility, improved commercial terms, greater flexibility, and more relaxed covenants. In 2026, we intend to fund CapEx through cash on hand and operating cash flow. We plan to prepay the remaining balances outstanding under our India credit facilities, including our loan with the DFC, ahead of its scheduled maturity. Doing so enables us to optimize our jurisdictional capital structure, increase the capacity of our local working capital facilities, while reducing exposure to India rupee volatility-related hedging costs. Separately, while not assumed in our guidance, potential monetization of 2026 Section 45X tax credits provides additional liquidity optionality. Our capital allocation priorities remain unchanged. Firstly, we prioritize maintaining a resilient working capital reserve of approximately $1.5 to $2 billion to account for industry cyclicality and uncertainty and short-term supply and demand imbalances. Secondly, we deploy cash to fund growth and replicate technology improvements across the fleet. Thirdly, we invest in innovation through R&D and targeted capital investments, as well as strategic enablers such as licensing arrangements to advance our technology roadmap, including perovskite optionality. Fourthly, we'll consider M&A, which we're actively evaluating to pursue complementary technology-adjacent opportunities to reinforce our strategic differentiation. As we near the conclusion of recent years of sustained high CapEx associated with manufacturing capacity growth, we will evaluate applying cash generation in excess of the above capital priorities to share repurchases. We'll provide an update on this later in the year, pending clarity around certain factors, including policy catalysts, realization of new bookings volume, and any decisions around 2026 Section 45X tax credit monetization. I'll now cover the full year 2026 guidance ranges on slide 12. Our net sales guidance is between $4.9 and $5.2 billion. Gross margin is expected to be between $2.5 and $2.6 billion, or approximately 49.5%, which includes $2.1 to $2.19 billion of Section 45X tax credits and $115 to $155 million of ramp and underutilization costs. SG&A expense is expected to be between $215 and $225 million, and R&D expense between $285 and $290 million. The primary driver for our increase is due to higher investment in advanced research, including expanded perovskite and innovation center activity and planned headcount additions. SG&A and R&D expense combined is expected to total $500 to $515 million, and total operating expenses, which includes $110 to $120 million of production startup expense, are expected to be between $610 and $635 million. Included within our R&D expense guide for 2026 are approximately $100 million of costs associated with perovskite development. Going forward, we intend to guide on an adjusted EBITDA basis, which we believe provides the clearest view of our underlying operating performance and enhances comparability across periods. We forecast full year adjusted EBITDA of $2.6 to $2.8 billion. From a first quarter earnings cadence perspective, we expect module sales of 3.4 to 4 gigawatts, Section 45X tax credits of $330 to $400 million, resulting in adjusted EBITDA between $400 and $500 million. Capital expenditures in 2026 forecast to range from $0.8 to $1 billion. Approximately half of the spend will support capacity expansion, primarily the South Carolina finishing line and the Louisiana plant. The remaining spend is expected to be split evenly between CuRe in India and R&D technology replication and maintenance. We expect to end 2026 with gross and net cash balances between $1.7 billion and $2.3 billion, and assume a full repayment of our India credit facility with the U.S. International Development Finance Corporation by June 30th, 2026. With that, we conclude our prepared remarks and open the call for questions. Operator?
We will now begin the question and answer session. Please limit yourself to one question. If you would like to ask a question, please press *1 on your telephone keypad. To withdraw your question, press *1 again. Please pick up your handset when asking a question. If you are muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Our first question comes from the line of Brian Lee with Goldman Sachs & Co. Your line is open. Please go ahead.
Hey guys, good afternoon. Thanks for taking the questions. I guess just on the ASP front, Mark, you mentioned the 36.4 cents per watt, including adders for the U.S. bookings this quarter. How much did the adders add there? And then is that sort of the level of entitlement, 36 and above, that you would expect for U.S. bookings through the rest of the year? Maybe can you comment on visibility you have on the pricing environment from this point forward? And then just secondarily on the gross margins, I'd be curious. I mean, this is implying kind of a 10% component gross margin in the guidance, even if I factor out underutilization and the 45X credit. So I know there's a lot of moving pieces, Alex, but when do you guys kind of get back to high teens, 20% type of gross margin for components the way you were at in 2024, and kind of what are some of the big bridges to get back there? Thank you.
All right, I'll do the ASP conversation, and then Alex obviously takes the gross margin. But so there's about, call it 2.5 to 3 cents of the value of the adder in terms of the ASP, that 36.4 cents. So that's about the number. So the Cure attributes will give you close to 3%. Now, not everything that was booked in that 36.4 actually had the adder. So if you sort of broke it out a little bit, you potentially are going to see slightly higher prices for the Cure attributes for the product that we booked with the Cure attributes. But, look, I think the entitlement-wise, I mean, I feel good about the pricing that we're at now, but I think there's some more catalysts that could still happen. I think some are leaning in with all the uncertainty that we referenced on the call in terms of what happens with 232 and what window are they trying to book into given the constraints with FIAC. And I think if we continue to see more momentum there, we just obviously saw the Solar 4 announcements, which obviously are going to address imports coming in from those three countries that we referenced. So there's potentially more tailwinds depending on how they play out that could support even better pricing as we move forward. But I think visibility-wise, I think that's kind of a good indication of where we expect the market pricing to be relative to the Cure technology.
Yeah, Brian, on the gross margin, so if you back out the 45X here, it's about a 7% gross margin. And if you think about that against the $5 billion revenue profile, it's about $350 million of gross margin. So if you try and walk that back up to call it the 20% number we've talked about before, this year we've got about $165 million of tariffs sitting in there, and about $135 on utilization. So you're about $300 million or so there, about 6 points of margin. You've got about $200 million of warehousing. I think we said in the Fed remarks that'll come down to about 100 on a run rate basis next year. So pick up another 100 million there, another 2 points of margin. And then if you look at the adjusters, we talked about 600 million in the backlog, mostly recognized in 2027, 2028. So you take 300 million across each of those years. That's another 6 points of margin. That kind of walks you back up to around about the $1 billion of gross margin and that 20% number. So tariff is obviously still in that. That's an impact that we're still wrestling with. But I'd also say you've got incremental volume coming in next year, which is not factored into that, and the contribution margin benefit of that, even ex-IRA, is going to be meaningful. I'd also say we're trying to look at this on an ex-IRA basis, but it's challenging to do that to some degree because we are adding incremental costs both by U.S. manufacturing and also by the mix shift to bringing more production into the U.S. And we're doing that, and that allows us, enables us to capture that 45X credit. So I know we're looking on a ex-IRA basis, but if you think about it with the IRA included with that 45X, yes, the core shows 7% this year and the walk up that we talked about just now, but you've got 43 points of IRA. So the gross margin on a GAAP basis will be 50% this year relative to 41 last year, which is the highest we've seen. So obviously we want to keep growing the core underlying non-IRA, and there's a path there, as I said, that takes you back up to that 20 and or about $1 billion at that $5 billion revenue profile. But you can't ignore the two and the interconnectedness of the fact that we are reshoring capacity, and that does come at a cost, both direct cost and mix shift cost, that enables us to capture those 45X benefits.
Yeah, and Brian, maybe I want to add a couple of things too. One back to on the pricing environment, because I also want to make sure this is clear, is that that product or that ASP is also reflective of largely influenced by a domestic content product, right? Now what we do a lot of times is it's agreed to around some number of points, which allow us to bring in some amount of international volume, assuming the tariff rates are amenable, such that we can blend international But if we ended up doing a straight up international deal, for example, with some of the capacity we have available with our Malaysia, Vietnam facilities, I would expect that price point to be closer to 30 cents. So I just want to make sure that that's clear. So if we actually end up, booking some of that international volume as we go forward, that you may see a lower ASP there because of that dynamic. I want to make sure that's clear. And then the other one, just to Alex's point around tariff, the other thing is kind of creating some headwind for us this year is, and we've mentioned this before, I mean, there's insufficient glass supply in the U.S. And we've been working to bring in basically brownfield and mothballed facilities and getting them up and operational. But to support the scaling that we have right now, we are bringing in some glass internationally and using it in our U.S. production. And that is creating a cost headwind. My inbound freight costs are higher. I'm bearing the cost of the tariffs. And what we would expect to do as we scale up our supply chain here in the U.S., which we're in the midst of doing, we'll see less of a dependency on that import of that glass, which will also help us a little bit on our gross margin profile.
Your next question comes from the line of Julian Dumoulin-Smith with Jefferies LLC. Your line is now open. Please go ahead.
Thank you all very much. Appreciate the opportunity to connect here. Appreciate it. Look, if I can ask you first off, just to reconcile on the volumes produced versus sold, can you comment a little bit about just what you're seeing here of late? And then separately, can you comment a little bit about what you're actually seeing in terms of sell-through on volumes out of Asia? I know your prepared comments had some nuance on this, but just elaborate a little bit about what both Southeast Asia/India are assuming here in 26 and what you're seeing preliminarily 27 as well.
Yeah, so, if you go to the slides, we give you a walk on what we're expecting to produce versus sell. The delta between the two is about 700 megawatts coming out of inventory. So that's the gap you're seeing between produced volume and sold volume. And we gave you the US number for sold. You can see it in there. It's 12.9. So is it 933? It's in the script there. We'll come back to you. But yeah, the delta is coming out of inventory. And what was your second question, Julian?
I think part of it, your question was on the sell-through of Southeast Asia, I think is what you're.
Yeah, on sell-through. Yeah. What are the dynamics?
So let's talk through that. So India, is going to produce, call it 3 gigawatts or so this year, and will be sold into the India market. We're actually going to have a really strong quarter. We had a really strong Q4, and we'll have a strong Q1 in India. So demand in India is strong. So we got 3 gigawatts or so, a little bit north of that because we got some inventory sell-through that will sell in 2026 in India, domestically manufactured, sold into the India market. Okay. Now, on the Southeast Asia, those factories are kind of running 20% or so. I mean, they're extremely underutilized. And, what Alex said in his prepared remarks is that we're looking at this almost as option value. Now, some of that capacity will be fully utilized once we get our South Carolina facility up, because the front-end capacity for, call it half of the Southeast Asia manufacturing, will come to the U.S. So that'll solve a piece of that underutilization. The other half is going to continue to be underutilized at a very low utilization rate. But what we're looking at this is really an option to allow some of these potential tailwinds around 232 and other things to play itself out, to see what the impact of that could be to create more demand for those international operations. We also, I think, as we indicated in our last call, we are trying to work with a couple of counterparties on potentially meaningful volume offtake for those international production. But that's all still in the works. It's still going to be largely tethered back to what happens in the policy environment. But we are incurring significant underutilization and cost headwinds because of what we're trying to do right now is figure out, let's create an option. Let's evaluate what we continue to see in the market. And we've been sort of wearing this for over a year now. It was about a year ago when these tariffs came in place. And, we started to throttle down, kind of towards the end of Q2, beginning of Q3. And we've kind of run at a very low utilization rate to try to sort of buy some time to see how these tariffs ultimately get played out.
Your next question comes from the line of Mark Strauss with JP Morgan. Your line is now open. Please go ahead.
Yes, good afternoon. Thanks for taking our questions. Within the last couple of months, there was an individual with a vast amount of resources that is talking about ramping up a supply of U.S.-based solar panel production over the coming years. Just curious, if that is having any real impact on the conversations you're having with your customers, especially if you look out to later this decade. I have a quick follow-up. Thanks.
Yeah, look, obviously very much aware of the announcement and the ambitions. From my understanding, a lot of that is not necessarily focused for, kind of our utility scale market that we're primarily focused on. I think it's primarily looked to be captive for their own consumption, for their own programs that they're envisioning. It's also out in a horizon, and I think there's also a pretty strong realization of some pretty significant challenges to try to get to that type of scale. And if you're really thinking about this as fully vertically integrated, all the way from polysilicon forward, you not only are trying to solve the constraint at, let's say, the cell level, you got to think through how do you solve the wafer and how do you think through the polysilicon, and the capital investment to try to move all that forward is going to be pretty overwhelming. And the technical aspects around it as well, of understanding freedom to operate issues. We've already talked about there are IP infringements all over the place within the crystalline silicon world, and everybody's going to stand up and try to protect their IP where it makes sense. So it hasn't really impacted our conversations yet. I think if they got to a realization where you started to see, sites being announced, actual equipment being purchased, operations being commenced, then I think you could, maybe it starts to sort of inform our customers' views of other thoughts and ideas. But as of right now, it's having very little impact.
Mark, just wanted to comment around that. And, as you're well aware, the biggest constraint that we're seeing in the market for hyperscalers right now is access to power. And as we've just gone through the process of looking to site our new finishing line, the biggest constraint we faced around that was land with available power to connect. So again, Mark mentioned you've got kind of capital constraint, which even that could be overcome, IP constraints, just knowledge and know-how. You've also got the constraint of how you would power these facilities. If you're trying to build to that scale, you'd be in the same constraint that the hyperscalers have today.
Okay, thank you for that. That makes sense. And then I just want to ask a clarifying follow-up to Brian Lee's question earlier. Mark, when you said the 36.4 cents is for the domestic content, are you saying that is the blended rate? So it would be a higher amount than that for the U.S. domestic content average with whatever 30 cents for international, or is that 36.4 how we should be thinking about the domestic content portion?
Yeah. So the way we I tried to mention this a little bit last time. The way we actually price is we negotiate with the customer some number of points that they need, given the already procurement strategy around the tracker in particular, and then what are the incremental points that they need relative to the window that they plan on putting the project into service. And so we will negotiate a points construct, which then gives us the optionality to blend whatever percentage we can internationally. And we're in a pretty good balance between the domestic S7 and the international S7. We can optimize there pretty well, assuming we choose not to sell into the India market. Where we're a little bit more misaligned is really with the only having, call it 3 gigawatts of capacity for S6 in the U.S. and then try to match that up with 7 gigawatts of international production, which makes it harder because you can't really blend that much international to achieve, let's say, a 30 or 40 or 50 point requirement that a customer has. Now, moving some of that finishing capacity in the U.S. also brings in some domestic content, so that helps move that equation a little bit. But what I was trying to say that if you have no domestic content at all embedded into a blended price construct, you're going to see a much lower. So if I go out and say, okay, I want a customer to buy 500 megawatts of an international only with no domestic content value, and you may see some of that in some customers that are doing a PTC project as an example, because the uplift on, the PTC is, not as meaningful as it is on the ITC. Those prices are going to be lower. And I just sort of want to make sure that that's clear and that's understood that, you could see a delta, I said 30 cents or somewhere in that range. If you're selling just a pure international S6 product into the U.S. market, you would see a lower ASP clearing price.
Your next question comes from the line of Philip Shen with Roth Capital Partners. Your line is now open. Please go ahead.
Hey guys, thanks for taking my questions. First one, just was wondering if you could give us a little bit more color on why no EPS guide for 26. And then secondly, in terms of the ASP implied for the 2026 guide, it seems like the US ASP might be a little bit low. I think in 2025 it was closer to 32.4 cents, but the implied US ASP in the 26 guide seems to be closer to 30.8 cents. So I was wondering if you might be able to give some color on that. And then finally on Oxford PV, can you share what kinds of efficiencies you're able to generate? What are you seeing in your test modules, if any? And then what's your sense of timing as to when commercial volumes could actually ramp? Thanks, guys.
Yeah, so Phil, on the EPS piece, we're moving to guiding to EBITDA. We think it gives a better view of operational performance. It's better comparability year over year. And especially a year like this year where you've got significant costs associated with both underutilization of our Southeast Asia facilities as we're deliberately curtailing those, as Mark mentioned, waiting for an option around whether there's profitable capacity or profitable production to be had there to serve the market. And we've got significant startup costs as we're moving that equipment from Southeast Asia to the US. And so, historically, we haven't done that around startup and ramp production, but this is a little different where effectively taking tools we already have in the ground and idling them for a significant period of time. So I think it makes it more comparable. But on the tax side also, we've got potential challenges around Pillar 2 this year, which will make the tax number very noisy going down to EPS. So on a kind of core non-Pillar 2 basis, expect very low tax expense for the year. But because the agreement's not yet been finalized, there's a potential chance we'll have to accrue significant Pillar 2 expense, which ultimately we don't believe will ever get realized on a cash basis. But until those agreements are finalized, we'd have to accrue that. So we think it helps us with comparability as well. On the ASP side, so I think your number is right, 30.8. That's if you look at what's in the backlog, it's around 30 cents. So it's about what's in the backlog coming out at that ASP with a little bit of uplift relative to some adjusters we get around freight, around commodities. And then there's a little bit of upside on the tech side as well there. If you think about, we mentioned on the adjusters going forward, there's about 600 million or about 3 cents a watt on average of adjusted value sitting aligned with the Cure platform. And most of that we said will be realized 27, 28, which is when we'll start having much more Cure product available to us. So this year we have limited Cure production, and given the timing of our decision to run that Cure relative to the notification timings in the contracts, we're going to see very limited upside from that this year. So that's why you're seeing that US ASP around 30.8.
I think the other thing, Phil, when you're looking at your year on year, you have to remember that last year, as we realized throughout the year, a handful of terminations. Obviously, the largest one being the Light Source BP termination, which that obviously impacts revenue, but you'd have to normalize, pull that out of your top line revenue, and then do your math from that standpoint. But that clearly provided some incremental uplift to the reported ASP last year because of some of those terminations. As it relates to the Oxford PV or just our Proscape program, I mean, basically what we're doing right now, Phil, is we have a development line where we're doing small form factor modules. So think of them, they're like 60 centimeters by 20 centimeters or so. So these are actual fully functional small form factor modules that we're producing in an actual integrated production process and doing all of our kind of conversion of some of the efforts that we do in our advanced research, whether it's in California or whether it's in Sweden, and we're doing all that testing within our development line. And if you look at our, as we said in the prepared remarks, if you look at our efficiencies and what we're seeing, in stability, we're best in class from many ways, right? Many different dimensions. So I feel good about where we are from a program standpoint, but there are still fundamental challenges that have to be addressed, and we are very good at understanding the nuances of thin films, right? We understand the issue of metastability, right? We understand the impact of encapsulating the thin film, right, to protect the thin film. So we have a number of what have been identified as, best in class, in particular Chinese perovskite product. And if you put those out into a test field, as we have, first off, they'll even tell you in their literature that they give you, do not expose the module to open circuit, which means effectively once you install it, it has to be immediately energized. And if you choose to expose it to open circuit, it degrades almost instantaneously in some cases. There's others that because their encapsulation is so poor that the film just starts to over time effectively pull apart, right? So there's a huge significant delamination that happens with the film, and it can't sustain itself over extended periods of time. And so there's many factors that factor into how do you commercialize a product. We are working on all of those dimensions, right? So our view is we need to think about the development, not just to drive the efficiency, also drive the attributes to a point where they're competitive, and then to manufacture that in a way that creates an enduring product that can be, into the field for 30 plus years and perform at attributes that are relatively close to the current thin film technologies that we have, and that we can do that all in HVM and do that in a way that we can do it cost competitively. So there's many different things that we're working on in that regard, Phil. So I would just say we're pleased with where we are. Our next phase is we will be investing. We've already started our procurement process to put it together a pilot line that will make full-size modules, largely still for development purposes. We'll deploy those modules in the field as well, some commercially with customers. And then as we evolve the development program, as we evolve the HVM issues in larger form factors, because anytime you scale from something that's, call it, 20 by 6 centimeters to something that is 2.5 square meters, there's issues you're going to have to deal with through that scaling process, and especially the uniformity of the film. Once we are better informed around how well that's progressing, that'll determine, overall commercial readiness. But, the entitlement here is an efficiency number that is 20+%. It's an LTR that is, competitive, a bifaciality that's, call it 70%, and a Tempco that's, somewhere in, the mid-teens, which is better than we have now with CadTel. That's the aspiration of what we're trying to accomplish, but a lot of work between now and then.
Your next question comes from the line of Vikram Bagri with Citi. Your line is now open. Please go ahead.
Good evening, everyone. I wanted to ask, sort of a two-part question about India capacity and potential for cancellations. First, on India, can you talk about the pricing environment? I was wondering if you can give us confidence that the sales in the market are viable, the pricing is stable, and is expected to stay stable throughout the year. Understand there is no sizable spot market in the U.S., but is there a possibility some of that volume can be rerouted to the U.S. given 15% tariffs now in place? And then finally on India, it seems there is a lot of domestic capacity for panels being ramped up. How do you think about that capacity in the long term and the viability of that market for solar panels? And then as a follow-up on cancellations, you've historically mentioned, pricing and EU players pulling back investments from renewables in the U.S. market has created this risk of cancellations. With lower tariffs, how are the conversations going with customers? Is that risk much lower now? And if you can quantify how much of the contracts are potentially at risk of cancellations? Thank you.
All right. I'll deal with the India question first, and I don't know if you got the tariff question. Okay. All right. So look, what I would say is right now, pricing is a point to look at in India. It is lower. What I would say, though, is we're effectively realizing high teens to low 20 gross margin. So if you want to look at it from a gross margin standpoint, because I think you have to understand the cost of manufacturing in India is significantly lower than what the cost of manufacturing is in the U.S. So yes, lower pricing, but you basically balance that out with a lower cost of production, and you're realizing, kind of high teens to low 20% type gross margin in India. So, that's obviously where we stand right now. And if you look across, the horizon of how would we optimize that, production? And one of the things I think you said is the risk of overcapacity. Look, I agree that there's that risk, but there's also what's counterbalancing that, and why there's also robust demand for our product and technology in India is that, the approved list of model and manufacturers in India is now moving further upstream. So it started off with the module itself. Now, effectively, for any project that is commissioned in April of this year or Q2, will now have a cell requirement to be made domestically, and then there's also they foreshadowed already a wafer requirement that effectively starts to come into effect in 2028. And there's not an existing vertically integrated manufacturing capability in India at this point in time. And I think what some of the manufacturers have seen is that it has become more challenging as they try to get into cells, and then even more so if they try to get into the wafer, and then obviously they're trying to figure out the poly side of the house as well. A lot still needs to happen from that standpoint. We also believe that from a cost standpoint, even if that vertically integrated supply chain were to happen, we will be cost advantage with our vertically integrated manufacturing facility, with everything being done within the four walls of a factory. Right. So there's a cost advantage. We think we also believe we have an energy advantage, which will be further enhanced when we implement our Cure technology in India, which will start beginning of 2027. So I look across the horizon, I feel like I got a better product, better technology. I've got a better policy environment that should continue to advantage us in terms of India. As a backdrop, to your point, we will continue to evaluate the construct of potentially bringing some of that product into the U.S. market, and we'll do some of that with a view of creating some competitive tension into the domestic market, because I don't want customers to believe that I don't have an alternative path other than selling into the domestic market. I'd like to be able to say, sure, at the right tariff construct, we can also redirect the product and blend it in with some S7 domestic product, and it still command pretty good pricing. It's a little bit choppy to continue to move back and forth, because today we primarily make a fixed tilt product for the India market, and then to have to convert the factory to make a tracker product for the U.S. market or export market, that's a little clunky, and you can incur some downtime and some cost, and the transportation of bringing that product into the U.S. is more expensive than we would like. So ideally, if we can just harmonize and keep running that factory all out, serving the domestic market, getting good ASPs, that's our preferred path. But we clearly would look at, bringing some of that into the U.S. market if the situation and the dynamics are right.
Vikram, you asked around cancellation risk and whether tariffs are playing a part there. Look, tariffs coming down are clearly helpful, but I don't think what you've been seeing on the cancellation side of the last year has really been tariff related. So the two aren't necessarily linked. I mean, what we said before and what we've been seeing is more of a strategic shift by certain players, especially oil and gas and the European utility players, to reallocate capital away from renewable development in the U.S. into some of their more core business on oil and gas development or European utility development. So where we've seen some of those players move away, we've seen others enter into the space in the U.S. and pick up some of that slack and see an opportunity in taking over those projects to develop them. So it's hard to handicap a cancellation risk in the backlog. Sure, it could exist. I think historically what we've seen has been potentially more risk around the international product, just given the value of domestic content. If you look at today, the amount of international product sitting in our backlog is pretty small. You can see that by how much we're producing out of Southeast Asia this year relative to US product. And so that product has potentially been more challenged. I think the US demand has been strong, and even if there were cancellations, they have much more opportunity to move any terminated US product back into the US market. I'd also say that, clearly we've been enforcing termination penalties and fees, and making sure that we capture the value in the contract. So if there's a contractual obligation for someone to pay an amount for terminating those contracts, we've been enforcing that and we'll continue to do so.
This will be our final question. Our final question will come from the line of Ben Kallo with Baird. Your line is now open. Please go ahead.
Hey guys, thanks for putting me in here. I just wanted to square, time to power is a big question or big emphasis out there, and I know you have so many moving pieces, and just bookings. I'm trying to square, time to power and the need for electrons with how you guys are doing bookings with your different moving pieces right now. Thank you.
Look, I think, Ben, you got to remember we got a luxury. We're kind of in a nice position. We've got 50 gigawatts of contracted volume that is going to carry us forward. There's a clear sense of urgency from customers around execution and time to power. I mean, there's customers that obviously have safe harbored under Section 48, and they need to get their projects commissioned by the end of 2028. There's others that are safe harbored under 48, and those who are continuing to safe harbor, because they can do that up to the middle of this year, to then get an opportunity to get projects done through the end of 2030. So there is quite a bit of demand. Our customers are also dealing with a lot of angst of trying to figure out permitting issues and other things they're trying to do, financing issues, getting things, in place for the current or the projects that they're executing against in construction and what have you, and then thinking through a longer position around across their portfolio, both earlier stage and then obviously late stage development. So that sense of urgency is there. People are being really creative, looking to do more on-site generation, try to get out from underneath the constraint of the interconnections. But if a customer does have an interconnection agreement, I mean, they're running hard and they're making sure they're lining up their modules as well as their EPC agreement and balance of system equipment to make sure they can execute on time. So it's a clear catalyst. I also think it is helping us, as we engage and we talk with customers around pricing as well.
There are no further questions at this time. This concludes today's call. Thank you for attending. You may now disconnect.
Wow, thank you. Thank you. I think this is where the stream ends, though. I'm fucking tired. So, whoever's still here, I appreciate you. Hope you have a good rest of your day. Thanks for always supporting the stream. And if you're new, thanks for giving the stream another chance. I'll see you guys tomorrow. Have a good rest of your day.